So if you see a random small charge, you're like, oh, that's not me. It's $1. I don't care. Now you do.
And that's a big horror story. When you don't use your credit card, they will eventually close it for no activity.
Because I was like, have you ever looked at your credit? Do you know what these accounts are? And he's like, no, I don't. And I'm like, you're not responsible for them. All you got to do is call, get your name removed, and they're off your credit. And he goes, are you serious?
Yeah.
And a month later, 60 days later, there's $32,000 gone off his credit.
Yep. Man, that's crazy. 800 to 500s?
800 to 500s. Yep. They lost every credit card they had. More than money, it's about empowerment. Welcome to MSI Wealth Chronicles. My name's Jesse Hartman. I'm here with Ricardo Mendiola. And today we're going to be talking about the horror stories, kind of stick with the theme of Halloween. You know what I mean? So we're going to talk about some horror stories we've heard of, that we've ran into. And not only that, but how they got in it and how they got back out of it. So what do you want to start with?
Well, I'll start off with one of my personal ones here recently, too. Ooh. I don't know if I told you, but someone got into, so I went into my credit card and I noticed that all my points were gone.
Oh, my.
Yeah. So then I called up, and whenever I called up and they ask you the security questions. They asked me my email, and my email didn't match. So they also changed my email. They changed my phone number. But I mean, that was horrific there. Luckily I caught it. I just happened to look at my points, and that was all the damage that was done. But
that is a lot of luck.
Yeah. And luckily they reversed it really quick. But I mean, it kind of scared me. I mean, because whenever you work really hard to, build your score up, and then you have it there and you know how sensitive it is. I mean, it's kind of scary whenever something like that happens. And then the craziest thing about it, and I'll tell you what I did to prevent it, from it happening in the future. But the crazy thing that happened is it keeps happening. So that happened with my Barclays credit card. Mm-hmm. And then they sent me a new credit card.
Right.
And it happened again. Where this time they didn't get my points, but they started going through their process. They go in there, They went in there and they changed my email address. They changed the phone number. That way, whenever they ask you, the two-step verification process or whatever, that way they pass that.
They also do that so you don't get a warning that something was bought or there was something going on.
Yep.
So it's really kind of insidious when they do that.
And then it happened with my Citibank credit card too.
Ouch.
So I ended up canceling my Citibank credit card. I know we tell everybody not to cancel your credit cards, especially if on your credit cards you have a low balance and you maintain a low balance.
Yep.
If you've had it for a long period of time. We always advise not to close your credit cards, because then you shorten up your length of credit history, which is 15% of your scores.
And it affects your amount owed. It hits you on both.
But I did it anyways because I didn't like the way they handled the whole identity theft, Citibank. I'm not saying that would happen with anybody else, but I didn't feel like they handled it appropriately. I gave them more than enough chances. So I was like, you know what, just cancel it out. So I ended up canceling Citibank. But what I did to prevent it is you could go to just Google. Fraud alert, Google fraud alert, and a lot of the bureaus, the three bureaus, offer this. Experian and TransUnion do offer it for sure. Not sure if Equifax does. I think they do. I think all three do. But anyways,
I think they do.
Just literally Google fraud alerts and fraud alert, and then just pick one of the three bureaus.
Right.
And when you sign up for a fraud alert with one of the three bureaus, they will inform the other two bureaus about the fraud alert. So in other words, they'll put it on the other two. Yeah. So all you have to do is put the fraud alert on one bureau, and then they will take care of putting it on the other two bureaus. And basically what a fraud alert does is anytime you try to get credit or someone else tries to get credit under your name, that creditor sees that there's a fraud alert, and they're going to ask you extra questions to identify that it is you trying to get that credit. They might ask you like extra security questions.
Right.
So yeah, it might be a little bit of an inconvenience to you if you ever try to seek credit, but I think it's well worth it, right?
Sure, absolutely.
Because if they do end up getting an account under your name and they don't pay it and it goes into collections, for you to try to deal with the bureaus and try to get that inaccuracy removed, it's a pain in the butt. It's a pain in the butt. And then the fact that you're gonna have to live with that, inaccuracy on your credit report for however long it might take, right? A month, 2 months, 3 months. I mean, let's say that you're trying to buy a house during that time. All you could do is really wait. So anyways, if that ever happens to you, I would definitely recommend putting a fraud alert on your credit report.
Another thing that that I've seen, and I have this on at least one of my cards, but I don't know if all of them offer it. So you may want to call your credit card company, ask about this. But I have a 2-part verification on a card that people kept getting into, like you were talking about. Like they got into my account and I caught it because I got an email the moment they logged in, and I logged in and could actually see them changing information. I was like, well, that's entertaining. Because I clicked refresh and my email changed between refreshes.
Wow. Yeah.
And I'm like, oh, they're in here with me right now. So what I did is go ahead and I froze my account for a moment. You know what I mean? But the other thing is I got 2-part authentication.
Yeah.
So every time I use that credit card, my phone gets a message, is this you? And all I have to do is press a button.
Yeah.
Right? And I press a button to say yes, and it runs the transaction as normal. But that kind of kept, if anything changes, I get a message going, is this you doing this?
Yeah.
And so that's something that's, it came out of the gaming industry, the 2-part authentication. Really? Yeah, because people were hacking systems all the time and hacking people's accounts all the time. And it was big money, real big money. Like they would steal all your stuff and sell it in those games. Well, the banks went, that's a great idea. Let's put it on the credit cards. Yeah. So that's another way to deal with those two. I would recommend both. If you've got that happening, definitely do a fraud alert, because if they're hitting one card, that means they have some of your information. That doesn't mean they can't figure out something else on another account.
Yep. And then, like I was saying earlier, make sure you check your personal information. I never checked that.
Right.
And come to find out, they had changed my personal information probably a month before I saw my points being gone. Ooh. So maybe if, it was part of my process, whenever I log into my credit cards to check my personal information, I would have caught it, sooner than later. But yeah, they actually logged in, changed all my personal information, and they even changed my checking account information that's attached to my credit card, because what they did is they cashed out my points. And whenever you cash out your points, your credit card company, most credit card companies give you choices. You could buy merchandise, or you could just, they put a cash value on those points.
Right.
And that's what they did. They depleted my points, and whatever that equaled out to be, let's say it was $600, they sent that over to their checking account. So yeah, brilliant. I was like, wow,
that's one that most people, even if they had their account hacked, which is what you had, you wouldn't notice that until it's too late. I mean, it could be a year before you see that. Another thing when it comes to credit cards and being hacked, if you ever see a random $5 charge on your credit card somewhere, go change your password right then. Because one of the most common things that people who steal credit card numbers is when they make your credit card all over again. Like they actually make a physical copy of your card. You can do that at home if you have the right magnetic stuff. And what they'll do is they'll run your card for $1 to see if it's active.
Wow.
And if they do that, or they'll run it and they'll make like a $5 purchase, and they'll see if there's any kind of bounce on it. If there is, they'll throw it away. Right? If it's not, then they'll go run it up. So if you see a random small charge, you're like, oh, that's not me. It's $1. I don't care. Now you do.
Yeah. And real quick, last thing before we go to the next horror story, getting also credit monitoring helps.
Yes.
So my credit monitoring did not catch that first episode, right, where they depleted my points. They didn't catch that. But even though I added a fraud alert to my credit,
right,
they've continued to try to get into my accounts.
Yep.
But the fraud alert catches it. And then another thing that's catching them now to this day,
right,
it keeps happening. I have no idea how it's happening, is my credit monitoring. I get alerts, did you try to do this? We didn't approve it because it looked suspicious, and blah, 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 blah. So anyways, I was really impressed with my credit monitoring. So if you don't have credit monitoring, I would definitely recommend that 100%.
Yeah, I get similar anytime, anything, whether I do it or somebody else does it, I get a message from my credit monitoring every time. So,
and a free one real quick, Credit Karma. If anybody wants to know about a free one, unfortunately it only monitors 2 of your bureaus, TransUnion and Equifax, but it is free. If you're okay with making a little investment, Smart Credit is a good one.
Yeah, very good
Identity
one.
IQ is another good one.
Yep.
The investment's like $29, $10 for each bureau, basically. So, and they do monitor all three bureaus. But
Yep.
go ahead. You have
I got a
another
horror story. I
Tell
got
me.
one that, staying in the vein of credit, but one that's not so sinister at first, right? So we went out when you sent me to work with one of the banks that wanted to do an outreach thing to the local businesses in South Dallas. I went out to it, right? And I was talking to these people who wanted to be small business owners. And one of the guys goes, I can't get any funding whatsoever. I can't get it, my credit approved, nothing. He says, I'm about to go bankrupt personally. He says, and it doesn't seem fair. And I got to talking to him. And he kept referring to this. He had like $50,000, $40,000 in debt. And he's like, and it's not even my fault. And it's kind of hard to believe somebody when they said they got 40 grand of debt that's not their fault.
Yeah.
How do you just fall into that? Well, I've got one where he did. So he was partners with another person in a business.
Oh.
Right? And the partner put him as an authorized user on his credit card.
Okay.
Right? Fast forward, business goes out of business. Credit cards were maxed out. Credit cards go to collections. Right? It's still showing up on his credit because he's an authorized user.
Yeah.
And this guy's got like $32,000 on 2 different credit cards, and he only has like 8 grand of his own debt. And I was like, you need to make a phone call, man.
Yeah.
This is why you need credit monitoring, kind of relating back to the last one. Because I was like, have you ever looked at your credit? Do you know what these accounts are? And he's like, no, I don't. And I'm like, you're not responsible for them. All you got to do is call, get your name removed, and they're off your credit. And he goes, are you serious?
Yeah.
And a month later, 60 days later, there's $32,000 gone off his credit.
Yeah.
I mean, and he'd been living with that for 4 or 5 years.
Yeah. Yeah. Yeah.
And was about to go bankrupt and absorb that money himself for somebody else's problem.
And it's funny that you're mentioning that because I kind of went through a similar situation with that. So someone put me on as an authorized user back in 2005 when I wanted to build my credit. That's one of the things that I did, right? I opened up a secured credit card, but then also I became an authorized user on someone else's credit card.
Right.
So here we are, 2024. What is that? 2024 minus 5? 2005? What is it, 15 years, 14 years?
15 years, 14 years.
So I've been an authorized user of a person's credit card. But anyways, here lately, I saw that they have a lot of debt on that credit card. So I've been debating on calling, to get removed as an authorized user so that debt could go away. It's like $30,000 worth of debt.
Wow. Yeah.
Now, it's a catch-22 because, yes, I'm being affected with that card because it has $32,000 worth of debt, but it also has been open for a long, long period of time.
Right.
So, but I've been debating on getting removed or not. But I called the person. I was like, hey, first I thanked them for putting me on as an authorized user. But
Yeah,
I asked
absolutely.
I asked them, if they had any plans on getting that, paid down, and they said yes. So that's why I decided personally to stay on it because their plan is to get it paid off here soon. So,
but it's smart. Again, you're watching your credit.
Yep.
Again, talking about that monitoring your credit, which a lot of credit, taking care of your credit, is just looking at it from time to time.
Yeah.
If you wouldn't have been looking at that, and that individual was not looking to pay that off, you might have had a sudden dip in your credit and had no reason understanding why.
Yeah, and kind of like you said earlier, debt will affect our credit score and it'll affect our DTI.
Yep.
But I have another one too. It's kind of piggybacking off the authorized user, and that's basically this one we hear a lot here at MSI. It's basically consumers that call us that have negative items on their credit report where they co-sign for somebody. I mean, that is a complete horror story.
Yep.
Whether it was their ex and they got a divorce, whether it was their ex, it was just a boyfriend and girlfriend, whether it was a friend, whether it's a family member. And that's why I always recommend not to co-sign for anybody. Because whenever, we always tell people this, whenever you co-sign for somebody, two negative, well, probably more, but two really apparent negative things can happen. One is that, exactly, right? If they pay late or they don't pay at all, it goes on your credit report.
Right.
And then number two, that debt, let's say you co-sign for someone with a vehicle, with an auto loan, that debt goes on your credit report.
Yeah, it does.
And that debt will affect your DTI. So that is a very, 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 very common horror story that we hear all the time. Co-signing for individuals, and the other party ended up, not paying at all, and it became a collection or getting a late payment. And it's not like they do it on purpose. Life happens, right? Life happens, and
most of them don't.
Yep. But I mean, that's probably the most common one.
I actually have I have one just like that same story. Husband and wife got divorced. He got the truck, and she kept the bill.
Yeah.
And he didn't pay the bill, but it was co-signed to her.
Yeah.
So they were coming after her. She paid that whole truck.
Yeah. Wow.
He never paid a payment. So it's one of those, you're hooked on it. Some people are like, well, I'll go get the truck. Here's the worst part about co-signing. You don't have any rights to the vehicle.
Yeah.
If you go to get the car, that's theft.
Really?
You cannot take the item that you co-signed for away. You are guaranteeing you'll pay it with no repercussions.
Wow.
It's here, blank check.
Yeah.
Literally. The other one that I worry about with that is people having joint accounts.
Yeah.
Especially if there's no matter what. I know a lady talking about a horror story that's married to this. A lady who got divorced. The husband and the wife in the divorce had amicable divorce. Really nice couple. Just didn't make it. They figured out a good time. They split up the house. They split up the kids. Everything went perfect. Their scores went from 800s to 500s.
What happened?
They didn't have any credit cards of their own.
Okay.
Every card they had was a joint account. And you can't just remove somebody's name from a joint account. You have to close it.
Yep, and open up your own.
And they both, though there was no fighting, and you think that a story where a couple had two adults doing it the right way. They love their kids. They care for each other. They split correctly, and they still suffered.
Yeah.
Because of getting that joint account. So if it's a joint account or a author or a co-signer, my advice is never do it.
Yeah.
Just don't. In the long run, there's too much trouble for them.
Yep. Man, that's crazy. 800 to 500s?
800 to 500s. Yeah. They lost every credit card they had. Yeah. They had 5 cards.
Because they closed them, right?
They had to close them all.
The credit cards, gotcha.
Yep.
They lost all their credit history. Yep.
They lost every bit of their credit history. And the only thing they kept was the cars that they had.
Yeah.
Was the only saving grace. They were like 580s, 590s.
Yeah.
Because they had like a car and like a personal loan each. Yeah. So they had something there. But all their history, they went from, they've been married for 15 years.
Yeah.
So their history went from like 15 years to 1.
Yeah.
They went from being, a long-term married couple to having the same credit history as a high school graduate.
Yeah. Wow. Here's another one, a personal one as well. I mean, I have tons of them, but as far as client horror stories and the personal ones, here's one that's also a common one for our clients. Back in 2005, when I finally made the decision, and you've probably heard this story before too, to finally improve my credit score, I started off, this is before I was in credit repair, I started off by paying off my collections. And
I did the same
back
thing.
then, so whenever I pulled my credit, I had 16 collections. And so my plan was to pay them off. And I was going to start off by paying off the lowest one, which the lowest one was a $500 collection. And I paid it off. Luckily, I had credit monitoring. I paid it off. It took me all month to pay it off. Where I used to work at in collections, we used to get paid hourly, and then we would get paid a bonus at the end of the month.
NRS.
So, yeah.
We worked together.
Yeah. So finally, I paid it. I paid that one off. I was so excited. It took me all month. Took my whole bonus check to pay it off. I was excited about my scores going up, and nothing. Scores didn't move at all. That's what my credit monitoring told me that. And so I was like, man, what happened? I didn't know what happened. At that time, I didn't know what happened. But I knew that's not the outcome that I wanted.
Sure.
So I stopped paying off anymore. And then, that's whenever I met a guy that worked in credit repair, and he told me why that happened. Whenever we pay off a collection, unless it's a medical, whenever we pay off a collection, it remains on our credit report as a paid collection, and that paid collection still affects your scores. And I know that a lot of clients can relate because a lot of clients consumers call us.
Right.
And they don't understand why their credit score is so low. And they tell us, I've done everything that I could think about doing. I paid off all my collections. My scores still haven't improved,
Yeah.
So it happens to a lot of our clients. When you pay off a collection unless it's a medical collection, it'll remain on your credit report as a paid collection, and a paid collection still affects your scores. So what can you do to prevent that? Two things is what I would recommend. I'm sure you would give the same recommendations. One is if you are going to pay off a collection, see if they will remove it from your credit report. It's called a pay to delete.
Yep.
So see if they will remove it from your credit report. Just ask them, if I pay this, will you remove it from my credit report? And try to, bargain with them. If they say no, try to, insist that they do. And if they say no, it's not you not having, negotiation skills or anything like that.
Right.
You're going to get a no 9 times out of 10.
Sure.
They're not allowed to remove that mark from your credit report. They'll update it that you paid it, but they won't remove the mark from your credit report. The only ones that remove it is a medical collection. A new law passed, and now
July 2 years ago, 2022.
Yep. And now they say that when you pay off a medical, it is supposed to get removed from your credit report 100%. Yep. But anyways, that was a horror story for me, and then I see that horror story happen all the time with our clients.
The sad thing is I did the same thing on my first couple. Oh, absolutely. It was, I didn't know any better. I mean, and that's a good thing. That's a good point to bring up for everybody. That can be a horror story anybody can avoid just by taking a moment and asking somebody. If you have that kind of, if you want to work on your credit, call MSI up. Talk to somebody there. Look at your credit. Go get a credit monitoring. Look at it. You don't understand? Call somebody like us. If you don't call us, call someone.
Yeah.
I don't actually care who. Just do it.
Yeah. And speaking of that, I said you have two choices whenever you.
You didn't.
Whenever you pay off, I didn't even finish right. Whenever you pay off, whenever you have a collection, to prevent that horror story that happened to me, where it remains on your credit report as a paid collection. One, attempt to do pay to delete, and two, you kind of touched up on that a little bit, which is you could dispute it.
Yep.
You could dispute it on your own. You could hire a professional company like ours, MSI Credit Solutions, but you could dispute it. You're not disputing whether it's yours or not. You're disputing to see if it's accurately reporting on your credit report. And you would be surprised how many negative items we get removed from our clients' credit reports because it was not reporting accurately. So those are the two choices that you could take if you're wanting to pay off a collection. Before you do that, pay to delete or dispute it. Go those two routes before you just flat out pay it.
Yep.
But what else? What else? Have you have another?
I got one more at least, and it is one of my favorite ones to talk about people and give them that warning out there. One of the biggest things that you do in your life, the average person, the biggest purchase you ever make is going to be your home, right? You go to buy your home. What are you looking at when you're buying a home? You're looking at space. You're looking at the rooms you're going to have in there. You're thinking about your furniture. You get through the loan process. You go and find. You get approved. You go find the house. You love it. You put the bid on it. You got next week. We're going to go to title, right? Here's where the nightmare comes in. I have had more than one couple decide that they were just going to go have a good time for the weekend. Yeah. And one particular, they went out on the weekend and they drove cars. They did not plan to buy anything. No purchase plans because they knew, I told them, you're not going to buy anything until after you get the keys. Yeah. I now tell people you're not going to give anybody your information until after you get the keys. Because they went to like 4 or 5 car lots.
Wow.
And they ended up with something like 15 or 16 credit inquiries on their credit. And they had to pull the last one on Monday. They were going to go to title, sign, they were doing that last credit pull. They went from 0 down to $20,000 down.
And luckily they had that, right? Did they close?
They did close.
Luckily they had that. That would have been a...
Yeah, they would have lost that house if he wasn't able to pull against... And he had to go pull money against his 401k.
Yeah.
A weekend of driving cars cost them $20,000. He might as well have bought a car.
Yeah.
Because he paid for it.
And me being in real estate, it's funny, I didn't even write that horror story down, but I see that all the time. Well, not all the time, but I do see it because we tell our clients. But I like what you said. Don't even give your information to anybody.
Don't give it.
We always tell people don't apply for anything, but that's even better. Don't give anybody your information.
I tell them don't give anybody information unless your realtor, your loan officer, and your credit person all say yes. Yeah. If they argue, let them figure it out before you give your information away.
Because kind of like we said earlier, when you get a new line of credit, let's say you're trying to buy a house in your situation that you gave, whenever you try to get new credit, the inquiry is going to drop your scores.
Yep.
And then let's say you do end up getting that whatever line of credit, whatever it might be, that personal loan, furniture, let's say, right?
Furniture
that's a
happens
common
all
one.
the time. That's the most common one.
You're adding debt to your credit report.
Yep.
Now that debt might knock you out of contention with your debt to income ratio. Yep.
By the way, I was joking about they should have went ahead and bought the car. They shouldn't have. They did the right thing not buying it. They just don't buy anything till you got the key. Because they give the key to you, that's after the loan has done something called funding. That means that it is now a real loan. And until you have that funded loan, and they will not give you the keys. Yeah. So don't do it, because if you buy it and it comes in last minute, I promise you, I've seen somebody for furniture be told, well, you don't have a house to put that furniture in.
Yeah.
Or a car to park. You got a car, but that you don't have a house to park it at.
Yep. Wow. Yep.
Probably the worst nightmare in my opinion. Could you imagine how heartbreaking that would be?
Yeah. And speaking of real estate, here's another horror story that I have. So, and I see this happen a lot being a realtor, but then I know this is going to happen a lot right now as we speak. So, I see this happen a lot. People try to refinance. Not right now. A lot of consumers are not refinancing because a lot of consumers that have homes right now, their interest rates they refinance whenever rates dropped. After COVID, rates got to after COVID, rates got to like the 2s and 3s.
Yeah, I got like 3.1.
Yeah. So a lot of people are not refinancing, but this is going to happen here in the near future. So in 2021, 22, 23, rates were fairly low. Well, they were really low in 2020, 21, 22. Then they started increasing. 23 and 24, they increased, and they peaked out this year.
Right.
Anyways, so the people that purchase a home in 2023 and 2024, this is for you. So what's going to happen is your plans are going to be to refinance when rates drop. The Fed's already dropped the rates once.
Yeah, they're going to do it again.
September. They're meeting again in November, and they're going
they dropped
to
aggressively
and
too.
they're going 50 basis points.
Yep.
And so they're meeting again in November to drop them possibly again. They're saying a quarter of a basis point. But anyways, here's what's devastating. Here's a horror story: is all those individuals that bought a house in 2023 and in 2024, the time is coming. It's probably going to be next year, early next year, where it will make sense for you to refinance. And the horror story is a lot of people are not prepared for when that happens.
Oh, you're right.
Yeah. Is your credit ready to refinance? So since you bought the house, have you gotten more debt? A lot of new homeowners do. They buy furniture, they do some upgrades to the house, some remodeling to the house.
Yep.
So that debt that you took on was an inquiry and then debt. Those two affect your credit scores. So do you know if you're ready and qualified to be able to refinance come next year if rates do continue to drop? I mean, to me, that's a horror story of itself, because I kind of went through it a little bit, but it's not exactly what I'm talking about. In 2007, I purchased a home, and right when I purchased this home, it's in Frisco, it's a townhouse. I still have it to this day. I purchased that house for $360 in 2007, and then literally, I mean, talk about not bad luck. It just happened. So, literally when I bought it, the crash happened.
Oh,
literally.
Oh, yeah.
And my house that I bought for $360, it dropped to like $190 within like a year and a half, 2 years. Yeah.
Ouch.
And so because of the crash, what happened? They started dropping the interest rates.
Right.
And so this is where I'm talking about. I kind of lived through that horror story a little bit. So when the interest rates dropped, because when I bought that house at $360, my interest rate was like a 7%, 6.8.
Yeah.
So after the crash happened, they dropped the rates to help out the economy. And so anyways, everybody was refinancing their homes. And so I was like, oh, perfect. I'm going to be able to catch a break because
right.
I bought this house for $360. It's only worth $190 now, So, but at least I'm catching the break of where I could refinance.
Right.
But when I went to refinance, the bank was like, no. It was like, you owe $360 and it's only worth $190. I can't refinance it for you. So I was like, so I can't take advantage of this rate? I was like, no. I was like, what can I do? There has to be a way that I could take advantage of this rate. And they're like, come up with the difference. 360 minus 190, give us that cash and we'll refinance your house. I was like, what? Impossible.
Wow.
So I wasn't able to refinance and take advantage of the rates. But anyways, so that's similar to what I'm talking about. I know it happens a lot. In 2000, 2021, 2022, 2023, a lot of clients would come to us, being in real estate, and they wanted to take advantage of I saw rates get down as low as 1.9. That's the lowest that I saw a client get, 1.9.
Wow.
And so anyways, people that had high interest rates in 2020, 21, 22, 23, they wanted to refinance during that time and get a 1.9, get a 2, get a, what'd you say you have? A 3 point?
I got 3.1, yeah.
They wanted to get that. And guess what? They couldn't because of their credit. So anyways, I think that's a horror story. Make sure you always keep your credit in tip-top shape, because you don't know when opportunities going to arise, like refinancing your home. You just don't know. And that's just one story, refinancing your home. I think that's a big opportunity.
Sure.
But I mean, there might be other opportunities. Opening up a business and you can't get finance because your credit's not in tip-top shape. So if you purchase a home, if you want to purchase a home, whatever, right? Make sure your credit is in tip-top shape so you could just take advantage of the opportunity that might arise.
Absolutely. No, I agree entirely. I mean, that it is, if you're looking at it, the rate, you're right. The rates are going to be coming down. We're going to be seeing more of that probably over the next 2 years. We're going to see a little bit of that. If it's steady, if it may be a steady drop, if you're not prepared when it's at its best, it could pass you right by because you're just not ready.
And it can make a big difference. I mean, I'm seeing it right now, hands on right now with my clients. So you get a $300,000 house right now with today's interest rates, your payment's going to be, if you give the minimum down payment,
right?
Your payment's going to be close to like the 1% factor that they say. You buy a home for $300,000, your interest rate is going to be right around, your payment's going to be right around 1%, $3,000.
Right.
It won't be exactly $3,000, but it'll be around 29, 28, 27 with today's interest rates. So let's say you have a house right now and whatever, in that situation, let's say you are paying $2,900. Rates drop to the 4s, and you have a 7%, your payment, you having a 7% right now, and then it going to 4. I mean, we're talking about a big savings for consumers. Yeah. So anyways, keep your credit in tip-top shape. Be ready for opportunity.
Yeah, be ready for, that's true.
Yeah.
That is a real statement, being ready. And that all comes back. I mean, when you tie it all back, if you really want to kind of put everything into a nice bow and ribbon, is monitor your credit, keep your eyes on it. Yeah. If you're not sure what to do with it, ask somebody.
Yeah.
Don't be embarrassed. I mean, nobody, the biggest horror story in America really is we don't teach people these facts in any school.
Yeah.
And that is the scariest thing to me, because you have people who are full grown that have no idea how their credit works.
They're not teaching it.
They're not teaching it, and they're running around getting credit cards. That horror story is the same thing I did in college, which was talking about my last one in my personal was I wrecked my credit in college because I didn't know any better. They handed me cards that had money on them.
Yeah.
That's what my brain thought, and I racked up, $10,000-$15,000.
Yeah.
There was no way I could pay that.
Yeah.
And
we hear that a lot. Yep.
Lucky it didn't get worse than that actually came out of that. So if you don't know, ask. Don't do what we did, which was make that mistake.
Yeah. Do you have another one? I have one more.
I don't have any more. We've got some pretty good ones here.
Yeah. And here's my last one. And this one, once again, happened to me. And then I hear it all the time with our clients. So my personal story is when you don't use your credit card.
Oh,
right?
I have seen this.
That's a big horror story. When you don't use your credit card, they will eventually close it for no activity. It happened personally to me with my Wells Fargo credit card. And the way that I caught it is credit monitoring, once again.
Yep.
I had credit monitoring just one day, boom, I get an alert that my score has dropped. And I logged into my credit monitoring and it said that my score has dropped. And then it gave an explanation that my credit history had shortened. And then I went, into my credit monitoring and I saw that Wells Fargo had closed my credit card. And they closed it because I never used it. And the reason why I didn't use it is because two main reasons. And I know that a lot of people could relate. A, I didn't know that whenever you don't use your credit card, eventually they will close it. Now, Every single credit card company is different. I can't answer when they're going to close it. Every single credit card is different.
Right.
If you're wondering, the best thing to do is call your credit card company and ask them, how long of me not using my credit card will you eventually, close it? So anyways, but one of the things that you can do to prevent that, and I've learned that since then, and the reason why, okay, let me go backwards again. The reason why that happened to me is because A, I didn't know that. Right. And then B, I didn't know that what I know now. So a lot of us, what we do is this: we probably use the credit card that offers us the best rewards.
Sure,
right?
Absolutely.
I use my American Express and Barclays credit card because they offer me the best points. The other ones I don't use. Right? Before I never used at all. Why? Right. They didn't give me American Express and Barclays, they were giving me better rewards. Right. So that's why I used them. And the other ones I did not use at all. And that's why Wells Fargo eventually closed it. Yep. So the lesson was, now what I do is I still use mainly my American Express and my Barclays credit card. But now what I do is all the other credit cards, I at least put something small on them, recurring. Right. Your cable bill, your internet bill, whatever, your car insurance, your home insurance, put something very small on there. Yeah, they're not offering you very good points, but still, it's better to put something small there. That way they don't close it, because if they do close it, you're going to go through the horror story that I went through, and your scores are going to drop. And that happened to me. That happened to me. It was a hard lesson, but sometimes you learn best through going through it yourself. So now, like I was saying, everything. There's action on all my credit cards. I have, my gym membership on Capital One. I have whatever, my cable bill on, Discover. I have blah, blah, blah on Bank of America. But my everyday credit cards are my American Express and my Barclays credit card. And so anyways, that happened to me. And we hear it a lot with our clients, a lot. So don't let that happen to you. Learn from our lesson.
Absolutely. Without a doubt. Yeah.
Has that ever happened to you?
That one hasn't happened to me because I completely ruined my credit and then learned about credit and started building it. But if I would have gone the normal route, you're probably right. That's probably the only mistake I missed. Yeah.
And if anybody has any horror stories that they want to share, just comment. Yeah. But did you have any other?
That I can think of. I mean, off the top of my head, no. We went through the big ones that I've heard and been part of. The only other one I can think of was a guy had like a 640 credit, which is not bad, but he was trying to buy a house, and he's like, I don't know what's going on. I don't know what's going on, and he says my score's at 640, and I pulled his credit report. We pulled his credit report, right? He had 6 credit cards and 2 auto loans, and all his credit cards except one were at 0. And his auto loans were like a year from being paid off. Yeah, he should have been way higher. And then I noticed that he had a $10,000 credit card with 11 grand on it. And I went, so what did they do wrong? Yeah. And he laughed. He says, they didn't do anything wrong. I pay him every month. And I went, you pay him every month? He says, yeah, I pay him on the 28th every month because every month has a 28 in it. Yeah. And I went, February. That's funny. I like that. Yeah. I said, do me a favor. Can you get off the phone, call that card, and ask them when they report you to the bureaus?
That's a good one.
And he called, and they reported him on the 22nd. Okay. So they're reporting him on the 22nd when his credit card was maxed out. Yeah. And 6 days later, he paid it off. And so it was ghost money. It's not real. Yep. And that's kind of like being haunted. Yeah. That's a different kind of horror story because he's just got this ghost of money past. Yeah. And he's like, oh, really? And he says, well, and he changed the date he paid on it. The next month, he was 7-11.
Yep, that's a good one. Yeah. And basically what Jesse's saying is make sure you pay. A lot of people pay off their credit cards just as long as they're not late. Right? As long as they're not late. Whenever the statement comes in or anytime between the statement coming in and when the past due date is, right? Right. But yeah, that's what you just said is better, is try to pay your credit cards before they actually report to the 3 bureaus. Yep. I always tell clients this. there's a certain date that the credit card company, your credit card company, tattletales to the bureaus. They tattletale to the bureaus on what your balance is.
Yep.
Try to have your credit cards as zero. Try to make your big payment, right? Before that date.
I tell them 2 days.
Good. Yeah.
I tell them 2 days.
Yeah.
Pay it off. If they report you on the 22nd, you pay it on the 20th.
Yep.
If they report you on the 10th, you pay it on the 8th. The reason is you want to have enough time for that to process through the company. Because if for some reason or another it gets slow in the company and they report you anyway, you know, you've done nothing.
Yep. And a good example that I could give in reference to that is this. So like, I hear loan officers say this all the time. Once you get to like a 740 plus, you're basically, even if you were 750, even if you were to 780, even if you were at 800, it's all the same, right? It's all the same. So once you get to that 740 mark. So imagine if the bureaus tattletale to the credit card. Imagine if the credit card company tattletales to the bureaus on the 28th, okay? And imagine you always pay off your credit cards on the 29th.
Right.
So if you go try to get a house, your credit cards are going to show balances.
Yep.
And let's say the loan officer pulls your credit score and you have a 720. 720 is still great, but it's not the best. It's not over a 740. And you could have had a 740 if you knew to pay off your credit cards before the tattletale date.
Yep.
You know, so yeah, that's a really, really, really good one. Pay off your credit cards, make your payment before that report date is the actual term.
Every time that report date. And you can, this can be settled easily. Call your credit card company, ask them 3 questions. Question number 1, what is their inactivity rule? Find out when the inactivity happens. Number 2, ask them if they'll do a credit limit increase without a hard credit pull. Reason you want to do that, you want to do that once a year, no matter what. All your cards, ask them that question every year. Set a date. That makes sure you're looking at your cards every year too. Number 3, you ask them what is the date they report you to the bureaus, or what date do they tattletale you to the bureaus. If you can just ask those 3 questions on every credit card you have, you're ahead of 90% of the populace.
Yep. Good stuff.
I do have one more. Can I give one more? And it really is probably the scariest one of the lot that and I just thought about it while you were talking. So picture this. I know a guy, amazing in his field, right? He builds cars. He builds classic cars from the ground up, right? Been in business 24 years. And he's been leasing that whole time from a guy, and the guy sells the land, right? So he calls me up and says, hey, I need to buy property, and I just want to look at my credit, right? So here's where it was almost a horror story, and where it still kind of is. We pulled his credit. He had no credit cards. He owned a house and a car. He was 3 months from paying the house off and 2 months from paying the car off. He had a 680 credit score.
Yeah.
And in 90 days, he was going to have a zero.
Yeah, when he paid off everything.
When he paid off everything. This is a man who for 24 years has successfully ran a business and has been very profitable. Like, he's done a good job with his business, and he's paid everything on time, and he did what he thought was right by paying everything off. And we sat down. I actually drove out to him because he's local to our area, and sat down and had a conversation going, where's this at? And it was really one of those, I was like, look, I prefer to do it in 60 days because I don't know how much that car is going to affect your credit score. But we have 60 to 90 days to not only find you a property, but to get you approved and closed.
Yeah.
Or else your business goes away.
Yeah. Yeah.
And that's a horror story to me.
So did he get the land within that time?
He did get the land within that time. He did get a place. And he also opened up 3 credit cards.
Good.
In
so
the process.
Again,
So he went down that road and he did what I did. I don't think he's ever going to use those credit cards for anything other than like Netflix, Hulu, and you know, something else. Right, Disney Plus. I don't know. He's got kids. But he's got grandkids, I should say. But yeah, no, he's finally on that track. And sometimes it's just, you don't know any better about credit. And here he was trucking along doing a great life. And if the guy with the lease wouldn't have pulled it then, if the guy would have been 6 months later, he'd been doomed.
Yep. So did he get the land?
He
was
got
able to
the
get
land. He got
Good.
it, actually a bigger piece of land for a cheaper amount than what he was paying for the lease.
Nice.
It actually came out with a good story at the end, but man, it was a near
Could have been
miss.
bad, yeah. But awesome. You want to close this out?
Thank you very much for tuning in to MSI Wealth Chronicles, building legacies one episode at a time. My name's Jesse Hartman. This is Ricardo Mendiola. And if you have any questions, please let us know. We'd love to hear from you. And thank you for your time today and hope to hear from you again.